G'day guys, Anthony here and welcome to Trader Talk, weekly video number 9. So let's dig in. Today we're going to talk about max losses of a strategy. Now this is an interesting one because everyone out there has their idea on the win rate and how much they risk per trade and all this, but how many people actually look to the maximum drawdown of a strategy? That's what we're digging into today, so let's get into it. So a lot of people and their idea when you first begin trading is you want to build your account the quickest way you possibly can. This can obviously cause a bit of drama and a bit of dilemmas, especially if you go down the route of risking 2, 5 and 10% per trade. But how far of a drawdown can you stomach before you just quit trading altogether? So what would your account look like? So for example, if you had a 10, 15, 20% drawdown, how would that be? Just because you have a 70% win rate doesn't mean your P&L trajectory is just going to be going up. You don't know if you're going to start trading a new strategy or the learning curve of a strategy where you're going to take a lot of losses, or you're going to pick up a strategy right when it's in a drawdown. You don't know this. So, a lot of people say that over time, and I do look at this long term with data of my own, that after a while when you do have a strategy that you've got the data, you understand the parameters, and you understand this particular thing, you can double your risk. And that's very true, you can, but what you need to know is how much of a drawdown the strategy is going to have. So before I jump into the numbers, what I want you guys to do out there is just ask yourselves, what kind of drawdowns have you had? What's the largest drawdown you've had in your strategy? How many losses in a row have you had? Was it 5 or 6 losses? And how did you react and come back from it? Were you trying to fight your way back? Did you have to take some time off to regroup yourself and to fix your mindset up because those losses affected you mentally a lot more than what they probably should have? Were you risking too much, and even though you had a 6-hour drawdown, maybe you're risking 2 and 3% per trade, and then that all of a sudden became a large dollar amount of a loss. So let's lose some hypotheticals now, and let's work this out, right? So let's say, for example, you backtest 500 trades in your sample, right? And that's 500 trades over 5 years. So on average, 100 trades a year, right? And you have a win rate of 66%. Now, this is irrelevant of the expected return on the strategy. So this is purely from the loss side. Because at the end of the day, right, where if you could make 200% per year, awesome. But if you don't actually accept the risk of the downside, that at some point you might be down 50%, you're never going to stick through to making 200%. So let's keep it like that. So what I want you to do is grab your calculators. Now this is a good one. So to work this out right, we do, I'll put it in first. So we do bracket, natural log. So that's the IN, and then our sample. Our sample is 500, right? So we do 500, close bracket, over, so a little, one over the other. And then the next part, we do brackets again, minus, little IN again, natural log, and then we do the percentage of the probability that we want to test. So say for example, with the example that we gave, we said it was a 66% win rate. So because we want to test the losses, we do 0.34. So that's the loss thing of it. So we do 0.34, close bracket, enter. So we see that in a sample of 500 trades, you could probably round that up, that you would probably experience 6 losses in a row at some point. So that's pretty good. That's pretty good. And you can also do it too with the winners. So for example, if you have a 66% win rate and you want to see how many winners you might have in a row, your maximum winners in a row would probably be around the 14 mark. So that gives you a bit of an idea. So obviously, win rates can certainly differ. But for example, what can actually be a little bit delusional is, let's take that sample size down to 50, right? And let's say you have a 75% win rate. No, let's go 50% win rate, right, off your 50 trades. So you have 6. I don't know if you can see that, if it's focused or not. So that's the same as what we got before, right? But with a 50% win rate. So what it does show us is that obviously the smaller sample size, the more likely you might get them in a row. Like if you've just done 1 year back testing, right? 6 in a row of 50, if you've done 10 trades, right? And they're already exhibiting a 5 to 5, and then you get 6 in a row, how's your mindset going to be? Are you going to be okay to get back on it and power on and keep going? Maybe, maybe not. And there's this whole thing about too, if people go for, if you go, the higher your risk reward as well, the lower your win rate's going to be. So let's look at it on like a 40% win rate, right? And let's say you've tested, 500 trades again, right? So let's work this out. So natural log 500, and then minus natural log and 0.6060, because that's 40% win rate, 60% loss. So now you're looking at a 12 trade streak of a drawdown. So for example, in this, if you say, my risk reward is 3 to 1, I have a 40% win rate on a 3 to 1 risk reward, and I risk 2% per trade. Okay, well, are you basically happy to experience a 25% drawdown at some point in the trading career? I mean, the key is that if you trade long enough, you're going to experience everything, right? You're going to experience times when your strategy doesn't work for ages. And the thing is too, if you average, let's say 3 to 4 trades a month, right? Trading this particular way, or 6 trades a month, you might be in drawdown for 3 or 4 months. Keep that in mind as well. So even if we go back to our other examples, if you have the drawdown of the 6 to 8 losing trades in a row, right, then you got to look at your expected return for the rest of them. You might only be looking at 0.7. So if you already have one bad month, then the next bad month is sort of making back up the previous month, and then the next month after that is again added to that. You might find you have a drawdown for 3 months. And how does that fit with you? I mean, everyone's got a different definition of, we've got all the alarms going off around here. Everyone's got a different definition of how they look at a drawdown in general, how long they can sort of be consistent for, I guess. And my question is, if you do have a 3-month drawdown streak, do you then question your own consistency as a trader? That's certainly something you got to think of as well. But my advice, and the main takeaway that I want to get across today, is get your calculator. What I'll do is I'll put an example on the email so that you can see it, and I'll make sure I just put it so that you have to watch this to know what I'm talking about. So you do your brackets in the number of trades, and then you do over minus in probability, and do that on your strategy and just see if you've already experienced that before. And then let me know if you've got any questions about it. I would love to hear. This is such a cool topic. I think these are sort of some of the numbers that a lot of people don't understand, don't realize. And when you jump into trading, you think, the probability is just going to play out of every 10 trades. If you got a 70% win rate, it's just always going to be 7. You know what I mean? You got to think of it on a larger sample too. If you've got a couple of 100 trades, a 25% drawdown could be a lot bigger. So keep that in mind. Have a good trading week, and I'll see you guys on the next.